Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 8th to Friday the 12th of the 3rd, 2021. We've written up the weekly flows to get us underway, so let's have a look then. So this is for the week we just mentioned, Monday the 8th to Friday the 12th, the last trading week. Euro dollar then plus 34, so this means over that period the euro dollar went up 34 points or pips. Euro yen plus 124, euro pound minus 37, pound dollar plus 109, pound yen plus 210, and dollar yen plus 65. If you look at the actual flows then, you've got a negative opposed driver in the yen at minus 399, so you've got front and back door flows the opposing positive flows were going mainly into the pound at plus 356, next into the euro at plus 121, and the dollar was the negative rock at minus 78, and this was an activity of plus or minus 477. So over the week then we had yen weakness driving the market, but we had not too far behind pound strength, bit of euro strength, and a small amount of dollar weakness in weekly terms. Right, we're going to stop that there and then write up the dailies before we do the analysis. Don't go away. Right, welcome back. We've written up the dailies then. So Monday the 8th, the start of the week, we had a positive opposed driver in the pound at plus 146, front and back door flows. The opposing negative flows mainly coming out of the euro at minus 137, the yen at minus 122, and the dollar was the positive rock at plus 113, activity plus or minus 259. Rattle through these anyway. Tuesday then, we had a negative unopposed driver in the dollar at minus 156, no backdoor flows. The opposing positive flows were mainly going into the pound at plus 83, the euro at plus 59, and the yen at plus 14 was the positive rock. Activity plus or minus 156. Wednesday then, we had a negative opposed driver in the dollar at minus 75. Front and back door flows this time, mainly going into the pound at plus 70, into the euro at plus 43, and the yen was the negative rock at minus 38. Activity plus or minus 113. Thursday the 11th, we've got a negative opposed driver in the yen at minus 193. Front and back door flows. The euro was the positive secondary driver at plus 143. The pound was plus 138, and the dollar again was the negative rock at minus 88. Activity plus or minus 281. And finally Friday the 12th, we've got a positive opposed driver in the dollar at plus 147. Front and back door flows mainly coming out of the pound at minus 85 and the yen at minus 81, so fairly balanced, and the euro was the positive rock at plus 19, activity plus or minus 166. Right, so we are going to rub this off, so we just need to have a quick look at it before we do so then. So Monday then, we had pound strength, euro weakness and yen weakness, and then we had a more extreme position on Tuesday. We had dollar weakness unopposed, with the pound and the euro being the bulk of the positive flows. Wednesday we had more balanced flows, and we had the dollar weakness still at minus 75. Thursday, yen weakness starting to come in here, minus 193, and Friday yesterday we had the dollar coming up in strength again at plus 147. So we're going to stop it there and then we'll do the analysis. Right, we're back again. So just to remind you then, over the week we had yen weakness at -399 driving the market. So we had yen weakness over the week, and we had pound strength at +356, sucking up the positive flows. So we had yen weakness, pound strength, and the dollar and the euro were holding the fort in the middle. Right, so what was actually going on in knocking it around during the week then? So Sunday, if you remember, we had China positive trade balance. Now we suggested that the China data cycle, which incidentally we're going to be talking about in the sister video later on today, to try and catch that if you can, it'll fill in a lot of the gaps, which is our economic calendar. So Sunday we had positive trade balance for China. Monday we had a weak GDP on Japan, JPY. Tuesday we had a neutral Euro GDP, so it was neutral there. Wednesday we had positive China CPI, so again positive data for China. And we had soft dollar CPI, and we had the CAD rates decision. Thursday we had the Euro rates decision, Thursday the 11th. And Friday we had a neutral German CPI, positive CAD employment data, and positive Michigan consumer sentiment to finish off the week. Right, so let's have a look at some of the asset classes and various things. So the dollar index, basically, so you've got this situation here. So basically the dollar index went above its previous resistance point, and it's come back down. It's gone below it. It's gone a little bit higher, and it's now come back again. But the dollar is quite strong in relative terms. So that's where we are. So gold has basically had quite an unpleasant time off the back of this dollar strength, and it's just come back a little bit. Oil, well, oil has been doing well, and it's about there. It's sub the highs, but doing quite well. So the oil market is strong. Wall Street then. Wall Street is really the main player in terms of US equity markets. Wall Street's sort of up there. Above the high. The S&P is basically looking just about there, just marginally sub high, and the tech is the laggard. Basically, it's looking to be about there. So that's the situation in US equities. Bearing in mind we've had this huge stimulus bill passed, 1.9 trillion, which is going to have is basically a massive injection in government spending, which will lead to a multiplied expansion in GDP in theory. Right, so we've just done that. So US 10-year. And the bond, well, the US 10-year it is operating about here, right at the lows. This is the price, so yields are at a top at the moment, a relative top, and the bond is operating a bit higher in terms of price, so its yields are relatively lower. So US 10-year yields are relatively higher than the bond yields in recent terms. Right, what else have we got? We've got copper. Now, copper's 2, 3, 4, 5. We've had these 5 pumps. It came back to there. It more or less went back to base camp. It dirged around, and it's now about here at the 3rd pump. So it's had a pretty roller coaster ride. but it's at about the third point, 1, 2, 3, so it's about there. Right, what else have we got? US steel. Now, US steel has done the classic W basically. US steel is there, so it's basically done the full U-turn, which is interesting. Right, so let's get rid of that, and then let's make some sense of what's been going on. Right, our trades, we've got about 11 trades, well not about, we've got 11 full trades running. We've got AUD, dollar, yeah, USD, long, we're short the NZD in the euro, the pound, the CAD and the AUD. So we're long euro, New Zealand dollar, etc. Right, what are we? We're about, so we're approximately plus 1150 points or pips in profit after all the manoeuvring. So moving on quite nicely, the trades. We don't feel it's hardly started. You know, we're literally going to be looking at target 5,000 to 7,000 points on these trades, as they should kick in the second quarter. So that's what we're looking at. We're looking to hold those positions. Obviously there's going to be they're going to get knocked around. We're going into the Fed minutes next week on Wednesday, I believe. So that is going to be a critical volatility point. But nevertheless, the positions are nicely set. We're staying in, and that's our position at the moment. We're plus about 1150 points to the good. So that's our situation. Try and catch the data cycle video, which is the sister video to this. We'll talk about some of the gaps here, and if not, see you for the Monday daily briefing. Thank you very much.